Are we facing the crash of all crashes coming? Some folks out there are starting to speculate that in 2024 we're going to see a massive crash. And what we're seeing this week has already been some pretty nasty ups and downs. A few nasty downs that people are kind of concerned about. Just at the beginning of the week, everyone was there like, okay, fine. We all agree that stock market is going to go straight up. And when everybody thinks that the stock market's going to go straight up, what does it do? Naturally, it comes on down. Why? Because there's no one left to buy. Everyone who's going to buy has already bought. And I'm going to talk to you a little bit about why this is setting us up for a major crash. Now, we haven't seen a crash so far. We saw some little air pockets that we kind of hit, but there's some serious things that you need to be thinking about. Everyone out there is thinking that the Federal Reserve is going to cut interest rates and it's going to be a bonanza for everybody. It's going to be fantastic. But remember, folks, before the Federal Reserve cuts interest rates, you have a market crash. Everyone keeps forgetting that. You have a market crash before they cut interest rates. So if they're going to cut interest rates coming up, you can better believe there's going to be a stock market crash. All right, friends, let's jump into it. We got a lot to cover. Welcome to Poplar Report. I'm Steve Poplar. I'm an accountant by trade, and I am keeping an eye on what's going on with the financial markets because I know a lot of you guys have money, your retirement accounts, brokerage accounts, you're invested in stocks and everything like that. I don't talk about it all the time, but when there are some moments where I'm looking at some inflection points, I give you kind of a warning. I called the, what was it, in August, September, there was a big dip. And right before that, I shared with you, hey, we're kind of getting to an extreme point here. And I'm kind of doing that again because what we're seeing here is that there's a lot less people trading this past week. And so with less people in the market, it kind of tends to move a little bit more. There were a lot of options that expired last Friday. There was a quad witch day, and it's a whole, I won't get into all of that, but all that to say there's a lot less people trading this week, and so things have been moving a lot more. And remember, this is kind of basically about the end of the year, and so as we go into the Christmas lull between Christmas and New Year's, not all that much trading happens. So we're basically looking at what's happening in 2024. And what are we looking at 2024? We're looking at a recession. We're in a recession. We're looking at the numbers. But everyone in the stock market seems to be encouraged by the fact that the Federal Reserve is going to be cutting those interest rates. They're projecting that Federal Reserve is going to cut 3 times in 2024. And like I said, so when's the market crash going to happen? Because usually they wait until there is a recession. And when they start cutting rates, it's usually because the stock market starts coming down and coming down hard. So I know everyone believes that stock market only goes up. But what happens when it starts going down? Remember, we're getting all these reports out there that people are running out of money. People don't have money to buy food. They don't have money to buy Christmas presents. How are they going to pay off their credit cards? How are they going to do that? Are they going to raid their retirement accounts? You better believe that's a possibility. People may raid their retirement accounts in order to pay off credit cards. People may raid their brokerage accounts, sell some stocks while things are good, and start paying off some bills. Or buying food, because you might have to sell some stocks in order to buy food these days. And if you don't have stocks, I don't know if you're going to, if you don't have food stocks or stocks, are you going to be able to eat in the future here? And that's why we keep recommending the best investment you can make is in food. Go get you some rice and beans and stock them up. Get some canned goods and stock them up. They last for quite a long time. If you get some Spam, it'll outlive you probably, right? People 30, 40 years from now can open up that can of Spam and probably still eat it. Because people do eat canned goods from decades and decades and decades ago. You can do that going forward as well. So food is definitely a good way to invest right now because you see what the prices are. The stock market hasn't doubled in the last few years, but you know what? Most food products have doubled in price. Think that one through, right? So while the stock market is up, the dollar is down and everything is more expensive. So is the stock market really up? That's a question you could be asking. And we're looking in 2024 at what? Recession, World War III. We have the Suez Canal essentially shut down. We have the Panama Canal operating at 50% capacity. We have all these ships sitting off the coast of China not doing anything because nobody's buying anything. It looks like worldwide recession. The economy is tanking. And we're going into a contentious election period in the United States. What could possibly go wrong? Can you imagine anything going wrong going forward? And yet the stock market seems projecting everything's going to be great going forward. People are out of money. And when the people are out of money, are they really going to be buying a lot more stocks? Nope. And when people aren't buying all sorts of fruit, frumpy little things from Walmart and all these other stores, are their stocks still going to go up? Are they going to be making money? Are these stores going to be making money when nobody's buying anything? You look at people's shopping carts nowadays, they're either stocking up because they know what's coming, or you see that they only have a few items in their baskets because they can only afford so many things. When people start spending quite so much money, it means the stores aren't making as much money. They're going to lay people off. We see what's happening out there. While the government will lie to you all day long about how employment numbers are up, the simple fact is, since the cough, while we've added back a bunch of jobs, what kind of jobs are they? Not full-time jobs, but part-time jobs. Number of full-time jobs has actually decreased since right after the cough. There was a spike back up, and then it started to level off a little bit, and it's been continuing to go up employment-wise. But really what we've seen is that those jobs that are coming are actually part-time jobs. We're seeing people losing their full-time jobs and getting 2 or 3 part-time jobs. That's what we're seeing out there. That's not good for the economy. If you look at actually what is coming in income taxes this year, you will see that the federal government is getting a lot less income taxes than they did last year. What would that mean? People are making less money, so they're paying less taxes. You can listen to the lies all day long you want. But as they say, the most accurate records out there of any civilization are their tax records. And friends, you can listen to the Department of Economic Propaganda all you want. You can listen to the Federal Reserve. You can listen to all the bankers. But I'll listen to the IRS when the IRS says, hey, we're not getting as much money this year because there's a lot less people getting paid quite so much money. And if people are making less money, that means the economy is going down. Corporations are paying in less money. Why are corporations paying in less money? Because they're making less money. Do the math, friends. If the IRS is banking on getting a lot less tax revenue, it's because everyone across all of society is making less this year. And if you think that means the stock market's going to go up, I think you're a crazy person. And I think there's a lot of crazy people on Wall Street. I think there's a lot of crazy people chasing all of these things in Wall Street and at home, all these market traders, gamblers, basically. The Federal Reserve is still tightening. They're pulling money out of the market right now. They're still selling off their balance sheet. They're dumping treasuries. They're dumping mortgages onto the market. It's just soaking up more and more money. And we're starting to see retail investors starting to pull back some of their money. We see banks pulling back their money. Why? Because they're in trouble because they're about to implode. These banks that had problems in the spring, they're still having problems. The reason why they haven't imploded is because the Federal Reserve has loaned them tons and tons of free money. Well, that little emergency bailout program is actually coming to an end in the next couple months. Over the next 2 or 3 months, we are going to see most of those reserves have to be filled by these banks. How are they going to fill them? If they can't just borrow money at willy-nilly. They don't want to loan money to each other. They need all the cash they can get. And retail people aren't depositing quite as much money into the banks. You seeing a problem here? The banks certainly are, and they're panicking. There is a lot going on behind the scenes that is not good. I don't know what part of what I've just painted sounds good to you, and if you are thinking, this is a great time to buy a whole bunch of risky stocks, well then more power to you. But I'm just here looking at the numbers, trying to give you facts, trying to let you know what's happening, and I'm looking over the horizon just a little bit at the recession that we're in will be announced soon as the projections come in. We already heard that the third quarter GDP of the United States got downgraded significantly. The estimate keeps getting dropped lower. Oh, it was actually lower than what we thought it was going to be. And then they lowered it again. And just yesterday, they lowered it again. And that's why the stock market was like, this is great news. If the economy is slowing down, that means that the Federal Reserve is going to have to lower those interest rates. Once again, so because you see a recession happening, you think that's going to mean that the Federal Reserve is going to lower interest rates. But they keep forgetting the fact that every time there's a recession and just before the interest rates get lowered, the stock market crashes. Friends, it's as clear as day for anyone who's willing to look at the facts, look at reality. But the thing is, all these smart people, or they think they're smart, on Wall Street are saying to themselves, well, there's more upside for just a little bit. Let's grab all that upside we can, and then we'll sell before everyone else does. They think they're smart enough that they can get out just before the crash. They're playing, they're putting their, picking up pennies and nickels in front of the steamroller that's coming at them. They're like, yeah, I'm fast enough. I can do this. But friends, is that really where you should be risking your retirement? We talk a lot about Genesis Gold Group here with getting invested in gold, silver, and platinum coins as opposed to being invested in stocks, or at least moving some of your portfolio, some of your retirement over that way. And there's a reason why I do that, because I believe that it's crazy to be in the market right now. You won't find me in the market right now. That's the truth. That's the truth. I'm just telling you what I'm doing, and I'm just telling you what I see coming. This is not financial advice in any way, shape, or form, but you would have done well to listen to me before about buying canned goods as opposed to buying stocks. And I'm telling you that now, going forward, canned food and food that's going to last is going to continue to go up in price, and the stock market probably is not. Act accordingly. You know, you're adults, and you can decide what you do for you, and that's your responsibility, right? All right, friends, if you found this video to be useful or helpful and you want to check out another video, there's another one right up here. I'll see you over there, or I'll see you guys later. Steve Poplar of the Poplar Report, out.